In today's video, I'm going to cover the whole entire market in terms of S&P 500, Dow Jones, Nasdaq, specifically SPY and QQQ ETFs for S&P 500 and Nasdaq. Now, in terms of Dow Jones, it's indicating potential further downside from now till July, reaching potentially about 37,700 points or 37,800 points. Currently at 39,069 points for the time being, but there's a potential that could be reversed to the upside where we won't see those levels if, for example, the Nasdaq, which is more focused on the tech sector, gets pulled up to the upside. And I'm going to go over all that stuff. So I'm going to go over trend lines, price actions, movement, my belief on what I think was going to happen. This is all just my opinion, so please do your own due diligence and research before buying and selling. I'm going to go over the economic calendar, 10-year treasury, so on and so forth. Keep in mind, tomorrow the markets are closed. It's for May 27th, 2024, markets will be closed. May 28th is the day they'll open. So I'm going to cover the economic calendar first for May 28th, 2024. And then again, I'm going to cover as to why I think it's going to be heading down from now till July, basically. And more importantly for Friday. Friday is an important day in my opinion too. So Tuesday, May 28th, 2024, at 12:55 a.m. we have Cleveland Fed President Loretta Mezert and Fed Governor Michelle Bowman speak in Japan. At 9 a.m. we have S&P Case-Shiller Home Price Index 20 cities. 9:55 a.m. we have Minneapolis Fed President Neil Casciari speak. 10 a.m. we have Consumer Confidence, and at 1 p.m. we have Fed Gov Lisa Cook and San Francisco Fed President Mary Daly speak. Now the thing is though, even if the Nasdaq, which is more focused on tech sector, does potentially in a way pull up the markets, right? I think the markets will still get dragged down nonetheless based off Friday's numbers, which is the PCE inflation numbers, which the Fed relies more reliant on these numbers, more specifically the core PCE numbers. I don't know, in case I said PCI, I meant PCE. So this is more accurate inflation numbers that the Fed relies on. And again, it's the core that they're going to be looking at, which removes energy, which energy would tend to be the higher portion of the inflation, but removing it, technically they're saying it's more concentrated because the variable of energy varies quite a bit in terms of volatility, So given that, these numbers for Friday will dictate the market for the coming weeks, in my opinion, because if inflation numbers are higher than expected and not the narrative, but the feel of the market, what they're expecting was hopefully one interest rate cut this year. But based off the last FOMC meeting minutes, it seems like the Fed wants more further data to reduce interest rates, and they're delaying it further. So the delay almost seems like, okay, it's not going to happen this year. Now, in my opinion, like always, it's just my opinion, so please do your own due diligence and research before buying and selling. I'm not a professional, but I do not think they're going to cut interest rates this year. And if they do cut interest rates within this year, then it's more pressure from the market than just to satisfy the market, right? Because we're at 3.4% interest rate, or 3.4% inflation numbers right now for the time being, and they want to get to 2% inflation. So to do that, I don't think any straight cut would be justified with the current data. Now, the data is not perfect at the same time. I think inflation is still higher regardless, but if you're just looking at strictly the data that they're looking at, they're not there, and to get there, interest rate cuts is not the way to go based off what they assume is the best calculations to lower inflation. So given that, Friday is going to be quite important, even if the markets do go up, because like I stated in the previous videos, for the most part, the Dow Jones and the S&P 500, but not the Nasdaq, those two are indicating further downside, especially the Dow Jones. The Dow Jones, which is more of the 30 large caps. So to me, it almost dictates the future movement, because these tend to move the market, is showing strong signals for the downside. Again, from now till July, so it's basically May 27th or 28th, I guess, when the market opens, May 28th, 2024, till some point in July, we will hit at one point coming down to this upward trend support level. So you can see right here, this dates since 2021, upward trend resistance line, upward trend support level, and resistance, and then there's 4 touch points here, but in terms of like 5-year chart, there's resistance here, and then upward trend support level. So to get to this upward trend support level right here, you're looking about 37,800, 37,700 points, give or take. Again, we're at 39,069 points, so we do have ways to go down. And in terms of 5-year chart, like I stated, we're in the 5-year chart. This is the MACD line dictating further downside. The 1-year chart is curving, or it has already curved down to the downside, showing additional bearish movement to the downside. And then the 6-month, 3-month, they're all pretty much pointing to the downside. 6 month downside, 3 month downside, potentially arching up to the upside. And then the 1 month is in the bullish territory, so expecting to go upside. But again, when it's heading down, so let's just look at the 3 month quickly. Heading down, it's not going to be just a clean drop, right? I could even draw it out. So this will never happen. Like we've seen, like for example, there's like flash crashes and stuff, or a flash crash at one point we've had in the past, stuff like that, et cetera. But this is very rare, very rare. Like you'll never see this happen. So for the most part, right? Not never, but most likely you'll always see this, and then there'll be up days and coming down. But ultimately, even if you have up days and like spikes like that, I'm saying at one point from now until July, in my opinion, we will hit the 37,800 points, give or take, right? So ultimately heading down. Now for the Dow Jones, it's clear that it's indicating to the downside based off MACD lines, trend lines, so on and so forth. But if you look at the Nasdaq, so if I go over Nasdaq, and before I actually go over Nasdaq, I forgot to go over the 10-year Treasury. 10-year Treasury is sitting at 4.467%, just FYI. Now back to the Nasdaq, so QQQ, just in case you're a new viewer, just like always, just to show just in case, dating back since 2010, this upward trend resistance line right here, upward trend support level, broke through since 2020 to 2022, but then got back underneath it right about here as of recent. So this was in March, give or take 2024, got knocked down underneath it, but when we went back up to test it again, got knocked down, and we're potentially testing again. Now it could break through again. It doesn't necessarily have to stay underneath it, regardless if the market's going down, basically, because what could happen is we could have major spikes on the Nasdaq side, and the markets could be heading up for a couple of days, which would be breaking up above it, but it would be potentially a false breakout if, for example, the thesis that I have in terms of Dow Jones most likely indicating further downside, that the market overall at one point will be heading down from now till July. And that's the case, then it'll just be a false breakout and then heading down anyway regardless, right? Just like we've seen in 2020, because the S&P 500, there is the same channel basically for the most part since 2010, but there's no real false breakout. It might have been a small false breakout, but nowhere near the 2020 to 2022 that we saw in Nasdaq. Now, in terms of the Nasdaq, like I stated, it is a little bit of a different narrative versus the S&P 500 and specifically the Dow Jones. It is showing the 5-year chart right now. MACD line is in the bearish movement, so technically downside, but it is arching to the upside pretty strongly versus the Dow Jones and S&P 500. The arch up seems like it might cross over to bullish, indicating further upside. But again, this is more hypothetically long term. Now, ultimately, when I mean by long term, I don't mean like forever, because all these charts, like you can see, this is 2010, ultimately is still heading up higher regardless at the end of the day. But it's more like long term as in like probably the next few like months to the year time frame kind of thing in terms of downward trajectory or upward trajectory and all stuff. But if you look at the 1-year chart, it was arching down to the downside, potentially coming to a downward trend resist, or not downward trend resist line, but bearish movement. But the problem is it's arching up. Now this one's the only one that's necessarily arching up in this kind of manner. The rest of them are pointing more to the downside, like I showed with the Dow Jones. But this potentially is showing a potential reversal. Now again, even though it's showing a potential reversal, I still think it's temporary until Friday numbers. So either by Thursday, by end of the trading day, the markets will start ticking down, and then if the inflation numbers come in worse than expected, then we'll see heavy drops, and this will just be neglected and end up heading down, or it'll be carrying through, and then Thursday will still come down in my opinion. But if the inflation numbers come in way better than expected instead of worse than expected, and if it's better than expected to a point that the market believes that interest rate cuts will be coming, not interest rate cuts, but an interest rate cut will be coming this year, then we'll see a pure continuation of this reversal to the upside, which could be enough to carry the market to the upside. Because I want to cover one price point. I think if we pass it, it depends. If we pass it and we're still past the Friday, like I was mentioning, which is May 31st, then we'll see a reversal to the upside, in my opinion, if it's potentially strong enough at the same time. But yeah, so let's go into, that was the 1 year. So 6 month, these are very short term, so it's almost useless to cover them until Friday, specifically for Nasdaq and S&P 500. But we have 6 month showing bullish movement to the upside, potentially could be arching down again, but it's debatable. 3 month MACD line bullish movement, arching down to the downside though, and then 1 month is bearish movement. Which reminds me, I should say one thing for the S&P 500 and Nasdaq. What could be happening for Tuesday specifically? It could open up a slightly higher, which I'm going to show here. I guess I could show right now. this is the all-time high. This was a previous spike up to the top side, but not all-time high. If this is just 2 touch points. Now, what could happen on Tuesday is we could potentially a little bit spike up and have a decent open, but then ultimately towards the end of the day, just keep arching down. Now, I don't see a real reason, unless if the whole entire market, specifically this whole entire week, is anticipating that the Friday is going to be bad ahead of time. Then, yeah, we could be heading down and just be heading down all the way till Friday, which would be pretty bad drops in my opinion. But I don't think that's potentially going to happen, but that is possible. So you should be aware of that too, where again, we'll spike up initially for the start of the Tuesday, but then just ultimately start heading down. And then that could be because that the market is worried about Friday's numbers, which is the PCE inflation numbers that the Fed relies on. Again, we're focusing on the core PCE numbers too. That's the thing. So that is a possibility, but I want to cover it just in case the overall movements. So right now we had this upward trend resistance line / support level that I've shown before: resistance, support, resistance. And then if we were to drop down, worst case scenario for the time being is one of these 2 levels: horizontal resistance level, upward trend support level, and then moving averages. So the price points that I'm looking at is if we drop down, first moving average, which kind of coincides with support level anyway, or resistance level, is $456.51. Right now we're at $457.95. But then the next price point is about $454.72, give or take, which I guess coincides pretty much with this resistance / support range right about here. And then the next price point, I would say, is pretty much right about here anyway too, because we see that drop right there and drop right here. I guess, yeah. So $452.80 definitely would for sure support, but $451.70 as well. And then this would be providing support with this moving average colliding right about here by the 450. With 450, to be honest, I think would hold us. Again, this is not talking about the Friday. This is more for the Tuesday / maybe Wednesday kind of thing. Depends on how fast everything moves in terms based on volume, right? Because these price points in terms of support levels, I don't think they'll be breaking drastically unless the market somehow panics. I just don't expect that to be happening. I don't think the market's foreseeing Friday specifically way too ahead of time. I think when it gets to it, which is like Friday, end of trading day, like near the end of trading day, that's when the market will be anticipating for Friday's numbers more specifically. Maybe by Wednesday too, but that's too soon in my opinion. And then if you think all is gonna crash, not crash, but like all is gonna break, like all hell is gonna break basically, you're looking at $446.95 for it, relying on this range of support. But I don't personally see it happening that fast. Again, this is more focused for Tuesday for the time being, but these levels will be holding true later on for a few days too at the same time, give or take, plus or minus. But ultimately, I think 450 for sure will hold us a good amount of support based off this moving average, upward trend support level, resistance level that we've seen multiple times. This dates back since November 2023. So it still has been holding out the whole entire time. Now, in terms of upward trend resistance level, in terms of higher price points, basically, if the $460 is going to be resistance, and then which coincides with this range right about here, and then at the same time the $462 price point in terms of all-time high is going to counter resistance. Now, if you think this upward trend resistance line dating back since 2010 will be tested within a couple of days, which is very possible because we're pretty much close to it anyway, you're looking at pretty much $466, give or take. It's showing $465.50, but again, it depends on how long we take to get there. The higher the high will be, the longer we take it to get there, the higher the high will be basically. So there's that. Now for the S&P 500, almost basically the same stuff for the most part, besides the narrative. The narrative is a little bit different. So this is since 2010, upward trend resistance line, upward trend support level, and support level for the major crashes. But there was no real breakout except potentially false breakout right here. And we have a lot more room to go to the upside. But the problem is it almost shares somewhat close to sentiment to the Dow Jones. Upward trend, it was a bearish movement, MEC line, but it was arching a little bit to the downside, somewhat recovered, but you could still see that arch potentially open for pullback, right? The last tick was a red tick as well in terms of the volume, the sale volumes, but it's not like the Dow Jones where there's a huge red tick for the MEC line. Now, in terms of one-year chart, it's still arching down, and it's not necessarily arching up to the upside. It's still potential to get pulled. Again, different narrative than Nasdaq, but same narrative as Dow Jones in my opinion, but it's not as strong as either or, right? The Nasdaq's more to the upside, and then the Dow Jones more to the downside. This one's pretty much in the middle for the S&P 500. Now, in terms of 6 month, 3 month, and 1 month, more for the shorter terms, just to cover them though, it's bullish movement to the upside, 3 month bullish movement to the upside, and then 1 month bearish movement to the downside. So almost same thing could happen for the S&P 500. We could spike up early part of the Tuesday, and then towards the end of the day, potentially, if the market is anticipating potentially a pullback based off Friday's numbers, anticipation for those, then we could start seeing a drop moving towards that. I don't expect the market to be anticipating further out numbers that far out ahead of time for Friday. I think more of the panic will start to happen by Thursday, midday to the end of the day kind of thing. And then Friday will be horrendous if the inflation numbers are worse than expected. But if they're better than expected and all that stuff, then we can see a flip to the upside, especially based off the tech stocks being pulled to the upside, because again, Nasdaq's narrative is more to the upside versus Dow Jones and S&P 500, more of the downside for them, for the narrative. Now, in terms of the movement overall, so we have potentially this channel, but this channel is not the greatest personally, but it's somewhat there. We have an upward trend resistance line. We've seen touch points here, somewhat here, and then touch points right about here. This is not really the greatest touch point, but either way, and then upward trend support level somewhat. It is holding through, so that's why I'm kind of somewhat including it, where potentially this upward trend support level / could act as resistance. So if we were to go up to it, we'd pretty much be hitting resistance at $532. We're sitting at $529.44, which coincides, by the way, with the previous resistance levels. The 532 was causing us issues before, and then the 530 and some change. It's always some change. It's not perfect. So 530 is going to cause resistance as well, which coincides with the moving average anyway, pretty much around the 530. So we have two moving averages colliding at around the $530 price point, which we have horizontal resistance as well. So 530 alone is going to be too hard to pass anyway. And then we get to the 532, which we've had resistance 532, 533, but mainly 532 resistance price point. And then after that, I think it would be pretty much hitting the all-time high resistance, which we're looking at the $534 price point. Now, if you think it's going to meet this upward trend resistance line, and that's going to be causing the issue, you're looking at pretty much by the time we meet it. Again, these are ballpark because this line is not that perfect. I apologize. I should have drawn it out way more better than this. But you're looking at $538, $539. So ultimately, I guess maybe getting close to 540, but it's such a clean number that I think 540 might be difficult to even hit. It might just be stuck at 539 the whole entire time. Now to the downside, you're looking at support pretty much around the, $527, but that 527 constantly is getting broken anyway. So I would say more leans close to the $526 price point based off the moving average, but then that 525. So that 525 we've seen multiple times act as support. Then it could break down to the 524 does hold up. If it does drop below that 524, then we ultimately see between the range gap of support between the 518 to 522. That 518 to 522 I think is going to hold us quite some time. I don't expect us to break through it unless we go to the VWAP support levels, which in terms of VWAP support levels, the 3 month showed about the 515, which would hold us, but I think that would be closer to the Friday personally. And then if after Friday, in my opinion, after the PCE numbers come out in terms of Fed inflation numbers that they're looking for, specifically the core PCE, then we could hit the 6 month VWAP, which is around the $503 price point in terms of support. But I don't see those drastic levels being hit anytime soon unless everything follows through in terms of inflation's worse than expected, blah, 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 et cetera, et cetera. Like if everything's horrendous, then we'll start seeing those support levels. Otherwise, I think pretty much we'll be stuck in the pocket of, in terms of the downside, $525 in terms of support, and then 518 to 522 in terms of channel consolidation time price point, and then the 515 if it gets worse, and then 503 if it's just horrendous. But again, like I showed for the Dow Jones, from now till July, we're heading around $37,800, $37,700, 37,700 points range from now till July. Again, this is all just my opinion. Please do your own due diligence and research before buying and selling. If you did like this video, consider dropping a like. It does help the channel, so thank you so much. If you found it beneficial, that is. And if you do want to be notified when I do upload these videos, consider following on X or YouTube, because I do post for the most part daily in terms of the market movement, all stuff, and economic calendar. Thanks again for watching, and I'll see you guys in the next video. Peace.